They've been getting a lot of buy ratings lately. They got like 4 buy ratings within the last week. Yeah, you're right. They've been making a lot of really big purchases lately, spending like hundreds of millions of dollars every single day. And they've added a couple of our favorite stocks, one that you and I like a lot, into their portfolio. They've been adding tens of millions of dollars of those. Yeah, Cathie Wood, Ark Invest. Yeah, they've been making some pretty big purchases. Welcome back to my show. We go live every single day at 9 a.m. posting new episodes, talk about the stock market, what's going on in business, and everything else going on with financial news. I don't know if you've seen, but Ark Invest has been making some major moves lately, some really big moves in their ARKK ETF. They've also recently come out with a new space exploration ETF with stock ticker symbol ARKX. And they're making some big moves, adding a lot of money to some of our favorite stocks, ones that I talk about a lot, ones that I'm personally invested in. And 2 in particular are in their ARKK ETF. Cathie Wood and Ark Invest have added hundreds of thousands of shares of 2 stocks that we like a lot. One is DraftKings and the other one is Palantir. So they've added tens of millions of dollars every single week for the last couple of weeks of these 2 stocks. So for DraftKings, they added about $22 million on April 7th. And then every single day consistently, they're adding well over $1 million, some days even up to $10 million. Same with Palantir. Palantir's dropped off quite a bit from all-time highs, and they've been scooping up shares left and right, just adding a lot more to their portfolio. They bought $37 million on... what date was that? April 7th, $10 million April 8th, $19 million of it on March 29th. So they've been adding, and that's DraftKings, they've been adding a lot of money to their stocks lately. A lot of money to Palantir, tens of millions of dollars Palantir, and tens of millions of dollars to DraftKings as well. These are 2 of my favorite stocks. First of all, so Palantir, they have some pretty big events coming up. They have a demo day, which may or may not have already happened when you guys see this. They also have been signing some pretty major contracts. They have a big contract with a government organization called Safer, and it's about $90 million for that contract. They've signed deals with IBM, with AWS, Amazon Web Services, and also with Microsoft. So they've been signing some pretty big deals lately, and at this price, they've come down quite a bit from all-time highs. One point they were well over $40, like they were at $40 a share at one point. Now they're at $24, around mid $20 per share range. A lot of potential moving forward, data analytics space, and also DraftKings. DraftKings, one of my favorite stocks for a lot of different reasons. First of all, sports betting getting legalized in more and more states, online sports gambling. DraftKings is like one of my favorite stocks for that, and especially with what's going on in New York, they're set to legalize sports betting probably within 2021, if not 2021, 2022. I don't know if you saw that, but yeah. So DraftKings has a lot to benefit from. They have partnerships with UFC, with the NFL, now with sports betting getting legalized in more and more states, and specifically New York looking to legalize sports betting. That will really have huge impacts for DraftKings because they're probably going to be one of the big players in that market, them and FanDuel. So yeah, I think both of these stocks, Cathie Wood, Ark Invest, are adding tens of millions of dollars of them, and I'm very bullish on them as well. Pretty cool though with their new space ETF. You saw that, right? The new space ETF, they've been adding a lot of new stocks into that. We'll probably go over that in another episode, but pretty interesting. It's not just only on space exploration companies or companies that do work in space, but really just companies that benefit from work done in space. So anything with 5G, things like that as well. There's a big event this week. Big event with StarPeak, Energy Transition Corp, and STEM Inc., one of our favorite stocks, and one that we talk about a lot on the channel. And they're hosting a fireside chat with StarPeak chairman and STEM CEO on April 12th, Monday, April 12th, the day that this video is posted, to discuss the merger. So, This is going to be a pretty important talk. They're going to talk about the pending merger, and it's going to be a live event that anyone could go to. All you need to do to register, I'll put the link down below. You just need to click on this link, register for it. It's going to be like a fireside chat, and it's going to be between Michael Morgan, the chairman of STPK Energy Transition Corp., and John Carrington, who is the CEO of STEM Inc. IPO Edge editor-in-chief. John will moderate the video session. It'll last about 45 minutes. Be a live Q&A afterwards, and you can ask any questions for people watching. They can ask. Pretty exciting stuff, though, because the merger, the official vote for it to be official, and officially go through and be confirmed, is going to be released on April 26th. And April 26th, they're going to release all of the details of this vote of any shareholders who owned, anyone who owned shares as of March 4th, 2021 was able to vote whether or not they wanted the merger to go through. And on April 26th, they're going to be releasing those results. And probably either, first week of May, we'll probably see it official that STPK Transition Corp, their merger is completed, and we'll probably see the stock ticker symbols transfer over from STPK to STEM. Pretty big news, though. A lot to like about STPK and STEM Inc. STEM Inc. is a leading company in the energy storage space. They're a pure play energy storage company with their proprietary technology, AI technology called Athena. They already do work with major Fortune 500 companies. And with the Joe Biden administration looking to pass hundreds of billions of dollars for infrastructure, the electric grid, electric vehicles, that's going to directly benefit STEM Inc. and their stock moving forward. First of all, with electric vehicles, more electric vehicles means more strain on the electric grid. More strain on the electric grid means that there's going to need to be a software or some sort of system to balance where energy is coming from, whether it's from electric grid, solar, wind, things like that, or battery. People are excited about electric vehicles, but more electric vehicles means more strain on the power grid. There's going to need to be some sort of solution for that, and that's where STPK and STEM come into place. Also, on top of this, like what happened in Texas and California with blackouts and during the winter, everything's struggling. Those states are already looking heavily into energy storage solutions like what STEM has to offer. STEM is the leading player in that space, and I think over the next couple of years, we're really going to see them explode. I think they easily could reach $120 per share, about 4x from where they are now. I think that is very, very possible. The head of the company, Carrington, he's had a very good track record turning companies from, $10, $20 million a year companies to $100 million per year companies, and they've already done that. 2020 they did $30 million in revenue. 2021 they already have under contract 135, so they've already 4x their revenue from 2020 to 2021. And I think there's big things we can expect from STPK, STEM Inc. moving forward, and the merger probably will be going through within a month now. It'll be official. Now into GameStop. Did you see what happened with GameStop the other day? You saw they've made a lot of different, appointed a lot of new people to the board, the C-level executives, and yeah, so they've been doing a lot of that. They got a new CFO, new chief growth officer, new chief technology officer. They've gotten people from Amazon and Walmart and a lot of big companies. They've been trying to get people who have experience in tech, because GameStop is trying to change from like a brick and mortar retailer to being a solely tech business. And now they just said that they named Ryan Cohen the chairman. So that's a pretty big deal. They announced that co-founder of Chewy, Ryan Cohen, who's been on the board of GameStop, is going to officially be the chairman. And they said that this is expected to take place following the company's annual shareholder meeting on June 9th, 2021. This is a pretty big deal. Ever since he joined the company, the stock price has done extremely well. He invested in GameStop about a year ago. They've done extremely well since then, really just because of everything with Wall Street bets and the massive short squeeze we saw. But now they're trying to, really turn around the company, turn it into a is, really focus on the technology behind it. They're trying to do sort of what Chewy has done. Chewy is an Amazon, but for pet supplies and pet products. So that's what GameStop is trying to do as well, be an Amazon, but for gaming. So they think having Ryan Cohen be higher up in the, have a more important position, more prominent position, probably will help with that. I agree with them. They've appointed him now to chairman. They have a new CFO, new chief growth officer, new chief merchandising officer, and a lot of other major positions they've filled now with people who have a lot of experience in the technology space. I think great move on their part, something that we'll want to keep an eye out on moving forward. Because it's not an easy task. It's not going to be easy transitioning from like selling games and discs, like the hardware, to now going into a digital, maybe software sort of business. It's not going to be easy, but with the people they have leading the company now, definitely more likely that they'll succeed than they would have before. Definitely more likely. Now into Skills. Skills CEO Andrew Paradise, he sent a letter explaining what's going on in the company. He's wrote this to Seeking Alpha. He explained, his experience, what's going on in the company, where he sees the future of Skills and of online gaming in the future, and what he has to say. So there's a couple of key points I want to go over from this. He goes over his background, his journey of being an entrepreneur, things like that. But a couple of key takeaways from this letter is that in the letter, he recently spoke about the growth potential of the e-gaming business. He said right now it's still in its very early stages, but how Skills focuses particularly on mobile first and on mobile gaming. He said that 23%, they're projecting 23% year over year growth for Skills, and they say that mobile has become the fastest growing segment of the gaming industry over the last couple of years. They say as people use their phones more than ever, we're seeing, mobile gaming become more important than it used to be. A lot of companies have been coming out with mobile gaming phones. We saw the ROG Phone 5, which recently came out, specifically designed for gaming. It has pretty impressive specs, and more companies are doing this as well. He also says how, in the letter, how they're positioned pretty well to capture a lot of the market share moving forward. And as the market expands, they think they've really positioned themselves well. They have the partnership with the NFL, which is a really, really big deal. It opens the doors to a lot of new people who may not have known about Skills. And he explains how the market's expected to grow to $161 billion by 2025, which is really supposed to 2x the market from last year. Last year, the market was about 86 billion. So it's about to double within the next 5 years. And he says that the company's 84% year over year growth rate projected for Q1 is something that he'd really like investors to focus on. Recently, the stock price has taken a bit of a hit. We saw a lot of these stocks, these high growth, high risk, high reward stocks have taken pretty big hits lately. But he says what's important is with these high multiples in terms of sales and in terms of their numbers and high valuations, what's important is to look at how fast they're growing. And they're growing very, very quickly. He said 84% year over year is a pretty impressive growth rate. And that's something that investors should be focused on, because while they do have a high valuation, they are delivering on their numbers and are growing very rapidly. He explained how last year Android made up about 14% of revenue, and this segment is actually growing twice as fast as iOS. So they're projecting to continue to generate a lot more money here. And the thing that I like about Skills, and that you like too, we've spoken about this, but Skills, average time that users spends on the platform is a lot longer than other platforms. So people spend a lot more time on Skills daily than they do on sites, on TikTok or Facebook or YouTube. The average time each user spends on Skills is pretty long. So that allows for more opportunities to monetize, make money, and just grow the platform. Speaking of big investments, or maybe not so big investments, Chamath, he said he totally missed out on investing in Coinbase because he opted to own Bitcoin directly instead. He came out and said on Twitter that he totally missed out because he didn't recognize the value of investing in the companies that were built on Bitcoin rather than just investing in Bitcoin itself. So basically, he explained how he invested in Bitcoin directly because his logic was that there was better convexity in Bitcoin itself. So he said that's why he invested in Bitcoin directly versus investing in the companies built on Bitcoin. But he said really he missed out. And he did get lucky because he invested as a limited partner with an investor who owns a big chunk of Coinbase. But like he didn't directly invest in Coinbase himself, missed out on the opportunity. But he said right now the right decision is to really invest in both. Invest in Bitcoin and in companies like Coinbase because this is only going to continue to grow. And when you're looking at the numbers that Coinbase is doing right now, they reported total revenue of $1.8 billion with its preliminary first quarter results the other day. And trading volume surged to an estimated $335 billion, which is 4x from the preceding quarter. So Q4 of 2020, which was $89 billion. And their net income on this $1.8 billion in revenue was $730 to $800 million, which is also a pretty sharp increase from the previous quarter as well. So they're growing very, very rapidly, and they have pretty high margins. User growth is exploding, especially with everything going on with cryptocurrency, Bitcoin. User growth is now at doubled last quarter to 6.1 million users. And it's a company that he says he really likes. It's a monster, and he would say right now best thing to do is invest in both like Bitcoin and in Coinbase rather than, just picking one or the other because there's benefits to both of them. Another tech company that people really like, Roblox. They've been getting a lot of buy ratings lately. They got like 4 buy ratings within the last week. They got one from Bank of America Securities, Goldman Sachs, Morgan Stanley, Truist. All these companies came out with pretty big buy ratings on Roblox, and they're saying how this company has a unique position in the gaming space. They've really positioned themselves to really benefit from the growth of of gaming and mobile gaming and just online gaming in general. A couple of reasons for this. The very first and foremost reason why I think this company, I'm extremely bullish on it, is because how much time people spend on the platform each day. The average time, they have about 33 million daily active users. And the average time that each of these users spends on the platform is 154 minutes. So 2 hours and 34 minutes. That is how much time the people spend on the platform on average. So that's a lot of time, more time than any other platform out there. And because of this, that opens the door to monetizing, to really generating a lot of money, putting in ads potentially, which they don't do right now, and monetizing other ways in these prize games. So right now the stock is sitting around low $70 per share range, and Goldman Sachs, they all gave them a buy rating between, let's say, $70 and $130 per share. So according to Morgan Stanley, they say that they're expecting double-digit compound annual user growth, and say that a successful expansion into mainland China plus adding in advertising could help it run the bull case of $130 per share. So right now they don't have advertisements integrated into it. They generate most of their revenue from in-app purchases and prizes for games and things like that. But this is going to be a pretty big company in my opinion. I'm really bullish on it. I think it's great because the one thing to keep in mind is there's always going to be new games coming out. And there's no way to know which game is going to be, the most successful. Like Fortnite might go away completely. There will be a different game, and it's always going to happen. But with Roblox, the way it works is they have a community of millions of developers that are consistently developing new games. And so, in my opinion, it's never going to go away because when one game sort of dies out, the developers on the platform are just going to be developing new games. So there's always going to be a new game from one of the developers who is on Roblox. It's going to come up with something that people like, and that'll be the next big thing. So right now they have a community of millions of developers that get paid very, very well from Roblox, in terms of how many people use their things. And these developers, they make a lot of money. They get paid a pretty significant portion of the revenue that their games generate. And that's one of the reasons why people like Roblox so much. Not only do gamers like it, but the developers like it too, because it's a really great opportunity for people to make money building games on the platform. Like, just anyone could go on Roblox, build a game if they want to, and Roblox actually pays very well when people, make games. Speaking of stocks that have been doing well, though, Canoe has been doing really well over the last couple of days. It's up over 20% in just the last couple of days. Stock ticker symbol is GOEV, and this is mainly because of what has been going on with the Joe Biden administration and the infrastructure bill that they're talking about. So right now, Joe Biden and the administration have been talking about passing a multi-trillion-dollar infrastructure bill. It's only been proposed at this point, but in this bill, what's been proposed already would have $174 billion for electric vehicles. It would also have hundreds of billions of dollars for electric power grid and things like that as well. So according to Morgan Stanley, they've pointed that there's a lot of potential and a lot of big advantages for a pure play electric vehicle company if this bill were to go through. And that's why a lot of people have been turning to Canoe, stock ticker symbol GOEV, because it's a pure play electric vehicle company. It's a smaller one out there. Market cap is around $2.4 billion. And while recently they did have a partnership that sort of fell through with Hyundai, there's still a lot to like about them. They have an electric pickup truck, they have delivery vans, and they've had a lot of demand, and a lot of people who have shown a lot of confidence in their electric pickup truck. Some people think it looks like a toy, but at the same time, it's very practical, very functional, and the whole reason they're designing it, the whole vision behind it, is to make it as practical as possible for someone who uses a truck. So right now, they say they're a tech-first, industry-second company. Their software and hardware are on connected platform that can capitalize for the full multi-owner life cycle of a vehicle, and that's where they're focusing on making their money. They said 70 to 80% of profitability will be generated across multiple owner life cycle of a vehicle. So they've built in a lot of revenue touch points for each time someone buys a vehicle, and that, with aftermarket customizations, with a couple of other things, but that is what they're focusing on now. They're focusing on building their own brand right now, their own vehicles, rather than worry about the partnerships. Later on, they say they could always go back, worry about the partnerships down the road. But either way, lot to like about this company. It is high risk, high reward. If, their electric pickup truck doesn't do well, that'll be a big issue because they're banking on that doing extremely, extremely well. One stock we haven't mentioned in a while on the channel is EVGO, stock ticker symbol CLII, but they've had some pretty big news come out recently, and that's that they've been starting to grow very, very rapidly in terms of how many charging stations they have installed. So over the last 10 days, they've installed 10 new charging stations. Each charging station had about 3 to 4 charging stalls. So in the last 10 days, they installed 38 fast charging stalls in locations spanning from California, Florida, Maryland, Pennsylvania, Washington, and the District of Columbia. So they've had a lot of new installations in the last 10 days, and this is a pretty big deal considering that right now they only have about 800 total charging stations. So adding another 10, that's a pretty big 10 in 10 days. It's a pretty big deal when you only have a couple hundred in total. So EVGO is the nation's largest public fast charging network for electric vehicles, and they're the only platform powered by 100% renewable electricity. Some things I like about them is they already have partnerships with pretty big organizations. One in particular is Tesla. They have a partnership with Tesla that now all the EVGO charging stations have Tesla connectors to them. So if you have a Tesla, you can charge your vehicle at one of their stations. In addition to this, according to their CEO, Kathy Zoy, she came out and explained how EVGO has been deploying and operating fast charging for a decade. And as automakers bring another 40 EV models to market over the next 3 years, they're expanding to make charging convenient for everyone. Basically, they say the way EVGO is designed, the problem they're trying to solve is for those people who maybe don't have charging stations at their home, or people who are out a lot, either working or shopping or just not at home a lot. So they said, EVGO, they locate their stations where drivers want to be anyways, near shopping, restaurants, parks, and other services. So they explain if you live in an apartment without home charging, work as a professional driver and need to charge fast to get back on the road, or have home charging and simply want to top up while you stop, EVGO is at your service. That is what they're designed to do. They're designed to have all of their stations be located at places you would already be anyway. So if you're at the mall, in 30 minutes, fast charging, you could basically charge up your entire vehicle. If you're at the grocery store, you go in, you can shop, charge your vehicle while you're in the store. So that's why they're trying to make it as convenient and easy as possible. And this is pretty big news that they are starting to ramp up how many installations they have. 38 new fast charging stalls in the last 10 days is a pretty big deal across 6 different states. So they're continuing to grow. And I think, this is a company you're definitely going to want to keep an eye out on moving forward. I don't know if you saw, but FUBO TV had a pretty big announcement. The stock price rose almost 15% in a single day. And that was immediately after they announced that they acquired exclusive streaming rights for the South American Qatar World Cup 2022 qualifying matches. And this is a big deal because as part of this agreement and this partnership, FUBO TV got the exclusive streaming rights for the remaining 70 matches, including the Qatar World Cup 2022 qualifiers. And right now, match windows are currently scheduled to begin in June of 2021, and several of them several additional match windows through 2021 and 22. They also have exclusive access to re-air the matches, highlights, and playing those. And matches will be featured both in English and Spanish commentary. So this is a really big deal for FUBO TV. This is the second big announcement they've had in the last week alone. The other day they had a big announcement, and I spoke about it in a video with Marquee Sports, which is a regional Chicago sports network. They have streaming rights to Chicago Cubs, a couple of other programs and sports for on that network in Chicago. Now they have access and exclusive rights to stream this with the World Cup and World Cup 2022 qualifying matches. So all this is really, really big for FUBO TV. A couple things to keep in mind is, according to the co-founder and CEO of FUBO, he said their mission is to provide the world's most thrilling sports-first live TV experience with the greatest breadth of premium content, interactivity, and integrated wagering. So he said, by offering the best of South American soccer in advance of Qatar 2022, we are further differentiating FUBO TV's sports-first content portfolio, enabling us to engage with more consumers than ever before. This is a pretty big deal because not only this, but with their partnership with Marquee Sports, now they're really trying to get as many sporting events as possible, because down the road, the main thing they're trying to do, the end goal, is to really integrate online sports gambling, sports betting into their platform. And these are all major steps into doing this. Illinois, where they got that new deal with Chicago Cubs, Marquee Sports, they've already legalized sports betting. Now, FUBO TV has hired a new team of about 100 people in Chicago to work on their new sports gambling division. With a World Cup in Qatar 2022, that's, not focused on sports betting, but getting more and more sports just makes it a better platform. And while FUBO TV isn't the largest by any means, they only have they have less than 1 million subscribers. It is growing very rapidly, and where the money is going to be for the company is going to be by integrating sports betting and online sports betting with with their actual streaming service. They're expecting to launch FUBO Sportsbook, which will be a comprehensive sports and entertainment experience through sports betting and interactive gaming in Q4 of 2021. And the more sports they have on the platform, the better that sportsbook is going to do. So, it makes sense. More sports you have, more games you have played, the more opportunities people have to bet on different games, different teams, and what is going on. So, a lot of exciting announcements with FUBO TV, and this announcement with Qatar World Cup is a pretty big deal. 70 remaining matches, exclusive rights to air any highlights, any reruns, and pretty big deal for them. Now on to stimulus. So the fourth stimulus check, there's been a lot of talk around, is there going to be a fourth stimulus check? Is there not going to be one? And right now, most of the third stimulus checks have already been sent out. The IRS has already issued 156 million payments for the third round of stimulus payments. 25 million people are going to be receiving a third stimulus check this week. And after that is sent out, most people will have already received their third $1,400 stimulus check. Now a lot of people are turning to look to the $1,400 stimulus check. Is there going to be a fourth stimulus check? Is it going to be $1,400? Is it going to be $2,000? Is it going to be recurring? So right now, nothing is guaranteed, but there is a pretty large group of representatives in both the House, and there are some senators who are pushing for a recurring fourth stimulus check. They've been talks of having either a one-time payment of $2,000 followed by $1,000 per month until the pandemic is over. There's been other talks about having just a recurring $1,400 per month check. Either way, though, right now, there's only 21 senators who are all Democrats. They wrote a letter to Joe Biden, Kamala Harris, calling for recurring payments, and another 50 or so representatives to do the same thing. That's not enough to get a bill passed, but if we do have enough of them continuing to talk about it, continuing to bring it up, well, then it may start to get more traction and be integrated more into their current discussions. But I'm not going to lie and say it's likely, because right now, as more people get the vaccines, the economy starts to open up even more, people return to work, it's going to continue to get less and less likely that something like a fourth stimulus check would actually happen. So just to keep it realistic, the chances of it actually happening are not as high as they used to be, just because as things continue to get better, the chances will get lower and lower. But there are still a handful, about 70 something people in Congress, with representatives and senators, who are pushing for some sort of recurring stimulus payment. So it is in talks in Congress, but right now nothing major has happened that would say, yes, it's definitely happening. Right now it's very much up in the air, and the way things are looking, it's probably, a little less likely that it's going to happen than it actually will happen. So just want to be realistic, but it is in talks. I'll keep you guys updated on any new developments there. That's really all I got for you guys today on the stock market, what's going on. Hope you guys enjoyed today's show. If you're new here, make sure to join us every single day at 9 a.m. Eastern Standard Time for the new show. Hope you enjoyed today's video. Don't forget, you can get 4 free stocks valued up to $1,600 when you download the Wrubel investing app using the link down below. Hope you enjoyed, and I'll see you guys in the next episode.